Hey there, and welcome to The Hash. I'm Zach Seward, joined today by Naomi Brockwell, Jen Senesi, and Will Foxley. We're here to get you caught up on all that is shaking in crypto, both day and night. And last night, it was about some Twitter drama between Jack Dorsey and the entire world of Silicon Valley VCs. And Naomi is going to get us up to speed. What's up?
It's actually me, Zach.
Oh, dang it. Oh, geez, my bad. Jen, take it away.
All right. So an unlikely duo kind of started off this conversation yesterday. Jack Dorsey responded to a tweet by Cardi B. She asked if crypto is going to replace the dollar, and Jack said, yes, Bitcoin will. Then he started tweeting more about Web3. And he said, you don't own Web3. The VCs and their LPs do. It will never escape their incentives. It's ultimately a different centralized entity with a different label. Know what you're getting into. Now, we talk a lot about all of the VC money piling into Web3, Web3 solutions, Web3 apps. And so I'm going to kick this off to you, Zach. Love the camo. I'm just noticing it now.
Thanks so much.
Floral camo.
Yeah, I love it.
Make love, not war.
Festive camo. What do you think of this? I mean, he really does have a point, and it's something that we don't often talk about when we're talking about the VC money piling into these Web3 apps because they're so cool.
I think Jack Dorsey's Bitcoin maximalism is cute, quaint, and old-timey at this point. I think that's what we're seeing here. The guy's just an unabashed Bitcoin maxi, and that's just what it is, right? I mean, all power to him, right? If he wants to go out there and sound the BS alarm on every VC and every big brand in the world aping into the Web3 movement, I think that's totally fine and good. But I think he is discounting the fact that people use these tools to achieve some degree of financial freedom, and I think that's what these systems are ultimately striving to become. They often start heavy on the VC side. Look at Uniswap, right? Definitely started out with some VC cash, but that's a decentralized exchange that's powering all sorts of applications across a more decentralized internet if we want to be circumspect about our terms. So I don't know. I think it does seem like a blast from the past. Jack Dorsey's kind of view on Bitcoin being the one coin to rule them all. He's really close to saying Ethereum is a scam and sort of reopening some of those old wounds. And it's great for engagement. It's great to have a rousing debate in which everyone wants to be on Twitter to have this debate into the wee hours of the morning. But to me, at this point, I kind of find myself more in the camp of those being like, hey, maybe it's time to give Ethereum a second shot here and think about the ways in which these smart contract-based layers are powering applications that are useful to people who are not Chris Dixon of A16Z, who are not some other Silicon Valley venture capitalist before sort of painting with that broad brush. But hey, man, made for some good clicks. I'll toss it down to Will.
I'll take it a different direction, kind of disagree with you, agree with you on some points. But I think that there is like a new strain of Bitcoin maximalism that's kind of going around right now that is actually a little better than the old strain. I think the old strain was always talking about, this is like a variant. You're right. You're totally right there. The old strain was always like, let's talk about the DAO hack. Let's talk about Vitalik. Let's talk about like all the different schemes that the early Ethereum people were involved with and all these scams and whatnot. And the new strain, I think, has a little bit more logic and cohesiveness to it. And it talks about the value of open source protocols and talks about like the value of developing tools that actually address needs as opposed to addressing wants that people in Silicon Valley have. And right or wrong, I think it's a refreshing take that there is like a new kind of argument coming out of this Bitcoin maximalist camp, because I think the old arguments were getting pretty tired. I think Jack is a very good bellwether for that argument. So if you look at his critiques yesterday, they were just critiques, right? He was talking about how investors often, they get the best cap table whenever they come to the table and are buying tokens. Who gets the best tokens? The people who are early, the people in Silicon Valley who are helping develop it. And yes, that is often how capitalism just works. And that's just how these projects tend to work. And the only reason they could get off the ground is because there's early investor money. But I think you have to know that that is very different than how Bitcoin launched. And I think that is kind of what he's ringing here. He's ringing the alarm bell that, hey, Bitcoin and these Web3 projects, They're not the same because they had different foundings, they had different token allocations. I think that's a pretty fair place to argue from. I do agree with you, Zach, though, that a lot of these other things, like, they need to be taken with, like, they need to be more generous takes here and there, especially on things like Ethereum, which it might have not moved to proof of stake. ETH2 isn't here yet, but it is doing a lot of the things that it's promised to do for years. Naomi, I want to get your take on this, though, because I feel like you might agree more with Zach today, but I don't know. We'll see.
Yeah, I actually completely agree with Zach. I think that a lot of people demonize VC money as it's like this big, scary thing. Like, people have money, they're investing in it. This is terrible. It means that somehow they have ownership over a program, over a protocol. I think that in order to determine whether someone has ownership over a protocol, look at how decentralized it is in terms of, like, are there barriers to entry for people contributing? How closed off is the GitHub? Are they actually, allowing pull requests from the wider community? Like, you have to look at that. Don't just paint all of VC with this brush and say, like, oh, money equals bad. Like, I hate that rhetoric, because it doesn't. Money is what fuels this ecosystem that allows for development. You have all these interesting, like, wonderfully technologically innovative tools that are on the cutting edge right now, and we could push further into that future, or it might just halt. And it depends on whether or not we can get developers to work on these things, right? And sure, there are a lot of people who are altruistic and are giving their time and who are receiving a much lower pay than they would have just working for Facebook or something like that. But they're choosing to give to these projects. But how sustainable is that? And a lot of these projects are being sustainable by getting money to fund them. So I think that ultimately it doesn't depend on whether or not there's people giving money to these projects, because people give a lot of money to completely decentralized projects, or they sponsor individual developers. Like, there's so many ways that money is fueling this system. But I think to just paint all VCs with this, like, therefore it's centralized brush, I think doesn't make much sense to me, because it completely depends on the project itself. But I think we're changing tracks here. And Will, I'm going to throw back to you.
Yeah, we're actually going to move to a topic that Jack Dorsey would probably not approve of, which is Terra and the Terra ecosystem, which has popped up as a real competitor in the DeFi ecosystem. Of course, DeFi has mostly been built on Ethereum, which is the second largest cryptocurrency by market cap and the largest community for DeFi applications. And there's been a lot of elbow jostling for this third place right behind Ethereum. And Terra has recently peaked up there, and it's about $18 billion in market cap for just like DeFi projects on the Terra blockchain itself. That's mostly led by the stablecoin UST that's on there, and also the Luna token, which kind of acts as like a stabilizing mechanism for that stablecoin. This is a really big hit in Southeast Asia or South Asia, especially South Korea. And it's done incredibly well over this last year. It kind of speaks into the topic from yesterday. We're talking about Avalanche, Binance Smart Chain, some of these other protocols have popped up this last year. Kind of been this battle for the base layer, so to speak, that term we use at CoinDesk quite often. And Terra's time now seems to be here. I want to throw this one to Zach, though. We've seen a lot of different projects pop up, kind of be the second fiddle to Ethereum's first string. Do you think Terra could be different, or is it just the same story we've seen with Avalanche and Binance Smart Chain and Solana so far?
I think it could be different. I think a term that I appreciated in this piece that I was unaware of was this triumvirate known as Solunavax, which is Sol Luna, which is the native asset of Terra, and AVAX, which is the native asset of Avalanche. And you're right, that is this sort of like trifecta of like three similarly positioned chains that offer faster, cheaper DeFi services and that are attracting users. And I think the thing that's cool about Terra is that the vision, especially around the stablecoin UST, which is also sort of surging in market cap, is that like all these DeFi systems run with these fairly centralized stablecoins, right? These are dollar-backed stablecoins that are administered by, Circle in the case of USDC and Tether in the case of USDT. And the vision for UST that's interesting is that this is an algorithmic stablecoin that is potentially more decentralized, but also potentially more risky than some of these asset-backed stablecoins out there. But the point that Do Kwon and others have argued in making the case for Terra, and specifically UST, is that you don't want to have a centralized stablecoin layer in the middle of a decentralized financial system, because that's a centralized point of failure that introduces censorship risk and other issues that that people in this space have long reckoned with. So it's interesting to see all this stuff cropping up on Terra. There's everything from GameFi to NFTs to DeFi applications, and Terra and its native asset Luna are certainly popping right now and having a moment. So whether that's going to stick, who knows? If you believe that these DeFi applications may have a future beyond Ethereum for the long term, I think this is probably a pretty good bet. If you think this is just another fly-by-night token that is going to rise and fall with sentiment, then hey, that's probably what you're thinking about this right now. So I'm going to toss this to Naomi. Very curious for your thoughts on the Terra ecosystem.
Yeah, I mean, I actually want to go to the lawsuit that they're involved with at the moment, which is kind of interesting. So they filed a lawsuit against the SEC. They're fighting the SEC, which is a very rare occurrence. And I'm very interested to see the outcome of this. Apparently, just before a conference earlier this year, they were served with a subpoena, and now they're challenging the SEC, saying that the regulator improperly served Quan the subpoena. This was at Mainnet 2021, because they don't have jurisdiction over Quan or his company. They've asked New York court to dismiss the subpoena. So the SEC opened up an investigation into the Mirror protocol, which is a Terra protocol. And basically what Mirror protocol does is it's a decentralized platform that allows you to trade or create mirrored assets. So the idea that you could create a synthetic version of stocks, it would just mirror the price of the stocks. And so this included major stocks on the US exchanges. This was launched last December. As we all know, especially watching Binance try to do a similar thing with their synthetic or tokenized stocks offerings. Governments do not like this. So SEC immediately pounced on this, was like, are you in violation? They did all this investigation. They actually couldn't conclusively find that they were in violation of any securities laws. And they were like, oh, okay, well, our hands are kind of tied until we actually take an actionable step towards this. So they served him with a subpoena. But the thing is, Terraform Labs was incorporated in Singapore, has offices in Singapore and South Korea. It's not an American company. Do Kwon is a South Korean national. He lives in Singapore. He's not an American citizen. And so it's like, why does the SEC get to determine what can and can't exist in all these different countries that have nothing to do with the United States? It kind of goes back to what we were talking about with Justin Sun saying that, America should stop dictating the rules around crypto for the world, because there are 7.5 billion other people in the world apart from those in the United States. And yet the United States has this very outweighed what's the word I'm looking for? They have a lot more say in regulation around the world than they really should. So it's very interesting that they're brave enough to go up against the SEC. As I said, that's a very rare thing. But I think, Jen, did I see your hand go up there? Was that Will?
Both of our hands went up. I have a question for Will, so I'll ask the question, and then Will, you can take it away. So despite all of this SEC drama that Naomi is talking about, we talk about that 18 billion number, the total value locked, I think, across 13 projects. And that's up 42,000% from the year before. And so I want to know what this tells you about DeFi going into 2022. I know later on in the show, we're going to talk about Google Trends and what people are searching for. And I think Bitcoin and ETH are on there and NFTs, but 42,000% is a lot in a year. So what does this kind of tell you about the DeFi ecosystem?
Yeah, I think the age-old adage of follow the money just still applies here. It falls for any sort of DeFi protocol. There's a reason that money moves into these things, and it's often because of the token incentives. The only reason that Ethereum also kind of locked and kept all this value on top of its chain was also because of the money. If you go back to summer 2020, which is often called DeFi summer, Compound launched what was called yield farming. It had been done before, but this was really the big first craze of it. And people flocked to the Compound ecosystem because they could earn yield on assets they put into the protocol. And all these other networks are basically doing the same thing, just with different tokenomics. And when one camp dries up, they go to the next one. All market makers in the industry do this. Retail guys in the industry do this. The degens do this. They're always just kind of following where the money is moving. And in my opinion, right now, it's Terra. That doesn't mean that Terra is just going to dry up one day when the token incentives do. But for right now, that's just where the hot ball of money has moved. And in 2022, we'll see if those people stick around. They certainly did on Ethereum. We'll have to see if these other chains kind of keep the users as well. Just to go back to Naomi's point, I think like the counterpoint that the SEC would make would be that Terraform Labs and all these other firms are basically making assets that are mirrored to U.S. equities or mirrored to the U.S. dollar, and that's where their jurisdiction would kind of come in. And I'm interested to see if that holds up in court going forward, because we are in a global world, right? We are in a very different system than the 1930s and 1940s, where the governments had more control over the assets inside their borders. And the euro dollar is a thing. There's a lot of dollars out there that are outside of the control of the United States government. And so I think there is going to be like a very interesting battle here between these crypto companies that have taken the next generation of euro dollars forward and the SEC and other government agencies in Washington, D.C. that are trying to keep their control over U.S. assets. But Naomi, I'll give it to you before we go to break.
Yeah, I mean, the one thing I would say is that with decentralized protocols, like where does the US exactly have the jurisdiction? Who was it who decided to merge this new stock? It's the community. It's a community vote of decentralized people all over the world who are deciding, like, we're going to mirror as this big group, this stock. And so it's not like you have the centralized protocol saying, like, we are now going to integrate this new thing. To be honest, I haven't looked into how Mirror exactly does this, but with most of these synthetic stock protocols, the way they do it is that it's like a community decision. You have to get a majority to vote. So I still don't understand how they can target Terra Labs and say, like, this is your doing because you created this decentralized project that then decided to go off on its own and do something to do with US entities. So it's, we'll see what happens with this. Very interesting lawsuit. But Zach, I'll throw it to you for tease.
All right, guys, guess what? It's 12/21/21, and in 4 minutes, it's going to be 12:21 p.m. Eastern. And 21 is a magic number in Bitcoin land because there's 21 million Bitcoins in total. So I just realized that. Any numerological people out there, totally vouch that word. Shout out to that. We're going to not talk about that. We're going to go back to the land of Ethereum and Web3 and NFTs when we get back from the break. But anyway, numbers. Numbers are cool. 21. Good stuff. Stick with us. It's the Hash.
Hi, I'm Christine Lee.
Zach Seward.
I'm Michael Casey.
I'm Christy Harkin.
I'm Isaiah Jackson.
I'm Serena Lynn.
Hey, this is Will Foxley.
I'm Teresa Santos.
Hi, I'm Lawrence Lewitton.
Hi, I'm Dorian Wayne.
I'm Nicolas Day.
Hi, I'm Kevin Worth.
My name is Naomi Brockwell.
I'm Jordan Muthra.
Hi, I'm Galen Moore.
Hi, I'm Brad Count.
I'm Pete Paschal.
Hi, I'm Jen Sanasi. You're watching.
And you are watching.
And you're watching CoinDesk TV.
Welcome back to The Hash, everyone. We're going to dive into the world of decentralized things. Decentralize all the things. And we are adding another puzzle piece to our decentralized internet world. We now have a decentralized rendering engine. It's just raised $30 million right in the midst of Metaverse going crazy, where a lot of people are in desperate need of such rendering engines. So you have giant investors like Multicoin, Alameda, and Solana Foundation. They're all backing Render Network's vision for a decentralized alternative to Pixar's massive rendering farms. The idea is that it would rival Pixar's massive rendering farms. It would also be cheaper for artists than cloud services like those offered by Amazon. The way that it works is you basically pool idle GPUs and you pay their operators in render tokens in order to use their processing power so that you can render things. So if you're a video editor, people are always using Amazon cloud services, or if now in the metaverse, you need to render these very complex 3D graphics, it requires a lot of computing power. Not many people can do this stuff on their home computers, and so they're using external sources. This is a way to kind of decentralize that and say, we're not relying entirely on Pixar, we're not relying entirely on Amazon. Let's decentralize this. Kind of an interesting move there. But Zach, I saw your hand go up, so I'll throw to you.
I just want to talk tokens. The token, the render token, RNDR, pumping on the news, up about $1 to $5.70 on this announcement. Ooh. So up about 33% in the last 24, according to data from CoinGecko. Remember, it's about the tokens, folks. This project has been around since 2016, and I don't quite get it, but I get that the idea of using idle computing resources to provide alternatives to centralized gatekeepers is really powerful, and I think we're going to see more of that over time, right? We've seen this with Helium, which tries to do this with sort of idle bandwidth that people have in their homes. We've seen this with other sort of Internet of Things connectivity startups in the space, and I think we're probably going to see more of them as, again, sort of crypto familiarity slowly ticks upward among a critical mass of users. So this one, to me, though the details of it remain a little fuzzy to me, to be perfectly honest, the vision of it, where, hey, if I have some idle processing power, I can direct it toward a collective endeavor and be rewarded for doing so with a token that is pumping handsomely at the moment. That's an attractive value proposition to, I think, a bunch of people who are going to be more crypto conversant in the coming years. But I think I saw Will's hand, so I'm going to toss it down to him and run with it, please.
Totally. Yeah, there's actually a model for this that already exists, and that's mining. This is how all mining works as well. Like, you use idle computation power from a GPU or an ASIC or whatever, and you point it somewhere and you do some work on behalf of somebody else, and then you get a reward back and for it. So it's the same model. It's just applied to a different topic here, which is graphic rendering. And like Naomi was talking about, video editors or anyone who's kind of doing animations, they need a lot of computing power and able to create things. So if you go watch the movie Up and you see like all the animations they've done, well, they basically just do the sketches for that and create like some rough models on a computer. But to make it like that nice pristine image that Pixar is known for, you have to have a lot of computation for a machine has to basically craft that for you. And it takes a lot of time, takes a lot of energy, takes a lot of computation, and it's super expensive. But there's a lot of GPUs just kind of sitting out there right now, especially if Ethereum mining ends in the next 6 months. A lot of that GPU power needs to go and point somewhere else. Otherwise, those machines are just scrapped. They're just bricks. But I think we're going to see more of this kind of pop up, GPU mining as a service, where if you have something, if you're a creator, you're someone out there who's building something in the animation space, you can just point and play to one of these services, pay a token or pay in dollars or whatever you want, and boom, you can start rendering it and make more animations, which is pretty crazy to see how that's going to change the whole ecosystem moving forward. There's going to be a place for some miners to move towards. Jen, I'll throw it to you.
Yeah, I was pretty much going to say what Zach said, but the article kind of focuses on the metaverse, right? And I think as we think about metaverses or the metaverse or a metaverse or whatever you want to call it, and the progression of it, like right now we've talked about this. When you go there, it just feels like a pretty basic computer game. You can run around, you can kind of do some things, but there's a lot of building to happen there. And so when I see projects like this come out that allow access to anyone to build 3D renderings for metaverses, I think that's really cool. You know, it's not just going to be the Pixars and the Facebooks that are building it. With projects like this, anyone can participate. It makes it more accessible and affordable to render this. And I think that is what we should be talking about when we talk about, the transition between Web 2 and Web 3. But I'll pass it back to you, Zach.
I think, no, you're absolutely right. Like, decentralizing the metaverse stack is an ambitious goal. And I think projects such as this that are incentivize users in the form of monetary rewards through tokens is something that we may see more of as people seek to, again, decentralize the stack of these metaverse experiences that everyone and their mother thinks are going to be ubiquitous in 5 years. So I don't know, interesting thought, but I saw Naomi and I'm curious for hers.
Yeah, I just love that this is yet another puzzle piece we've added in and a thing that we're figuring out how to decentralize. So Filecoin, you've got it decentralizing storage, and currently it's like hosting things like, WikiLeaks, Wikipedia, all of these different important treasure troves of information. We don't want them hosted on like a single server. And so we're figuring out how to decentralize that information. Helium, as you already mentioned, Will, decentralizing bandwidth. We don't want to just be relying on centralized internet service providers, like all of these, like we're figuring out how to decentralize exchanges, things like ThorChain. Like I'm loving Web 3.0. I'm loving this decentralization movement. I think we have a long way to go, and we shouldn't kid ourselves that we are removed from this centralized position, because there's so much like DNS servers. Like we have unstoppable domains as a way to decentralize that, but there's such a long way to go to get out of the fact that, so much of the internet is still centralized. I agree with him 100% there. Although I disagree with the VC remark as that being the evil part of this, I completely agree with him that we need to be mindful of how centralized these systems still are in a lot of ways when we use them. But we're definitely making strides, and I'm so excited, and I wish we could move faster, and I want more of that VC money to pile in so we can get more people working on this, because decentralization is so important. Because if it's centralized, the government could just like cut cables or do whatever, and we could shut down entire systems. We don't want that. We want redundancy. Very excited to see this. But Zach, I'll throw to you.
Yeah, I was going to say something about just like, there's a time aspect to this like VCs are bad conversation that I feel like is getting skipped over here. This is a project and a token that's been around for a number of years, right? So the thing about crypto and capital formation is that anyone can participate, right? They can get in on this token and they benefit from later actors, including Multicoin, Alameda, and the Solana Foundation, aping into this token much later than when they may have done that. So I think, as much as we've sort of vilified the VC, the big bad VC when it comes to Web3 development, there are other earlier actors who stand to benefit from their involvement. I think sometimes that gets glossed over. So Render may be a good example of that. All right. Anyway, sorry about that. I went on a rant. I'm not trying to stand for
good rants.
Anyway,
yeah,
all right.
It's about time. Overdue for a rant.
Good times. All right, stick with me. We're going to change gears. We're talking about NFTs. NFT search interest is popping. Market's kind of iffy, but people are out here looking to learn more about NFTs. It hasn't necessarily translated into more NFT sales, mind you, but NFTs as a concept seem to be popular, as indicated by various Google search metrics. I'm going to throw this to Jen. She knows the most about NFTs of the lot of us. Okay. What's going on here? Is like does NFT interest and like market downturn like correlate? And do they flip when the market is frothy and NFT interest is down? What's your current view on the relationship between those two things? And I'm just going to keep going like this.
Keep going.
Yeah.
Whole segment.
Just do that the whole segment. I love it. There we go. Okay, so here's my takeaway from this article. NFTs had 100% score for Google Trends, meaning that, everyone's searching for NFTs. Bitcoin and Ether are down. I just think that NFTs really exploded on the scene. Like, I think this year is the first time everyone heard about NFTs. Everyone's kind of searching it to kind of figure out what this means. If you're not a crypto native, if you are a crypto native, maybe you're looking for the utility, like what this could mean in the long run. The decrease in sales of NFTs is interesting. And this just, I think, points towards that utility aspect. I think everyone got into the, for lack of a better term, hoopla around NFTs around the beginning to the mid of the year. Choice. Yeah, right? The hoopla. Thank you.
Don't say it twice.
And I think we saw sales kind of taper off as people now start to think about the actual utility. I think we're going to see a lot of innovation and invention when it comes to utility in 2022. And so these Google stats just really made sense to me, but I'll pass it off to you, Will.
Yeah, I think that one thing that could be overlooked in this is my understanding is the price floors for a lot of like the top NFTs haven't really budged. And they cost a ton of money, like $250,000 for some of these like Bored Apes out there, and even more so for a lot of other top NFTs out there. And I think a lot of like the bad NFTs kind of got washed out pretty quickly. And so people are just like, hey, if I want to buy an NFT, I want to buy a top one. They're too expensive right now. So maybe I'm going to be sidelined for a little bit. And I don't really know of any kind of like mid-major or smaller NFT projects that people are willing to trade for like $50 a pop and kind of hold on to. If you're going to buy an NFT, I feel like it's going to be like a few $100,000. Just throw that out there, be part of that club. And Zach can correct me if I'm wrong on that, but that's my understanding of it. And that's why it would be like a lower volume for buying NFTs. And I think you're also right, Jen. Oh, Zach, take it away.
This Will goes to a mining company and he's out here buying... He's buying 6-figure NFTs like it ain't no thing. Come on, man. Nah, I think the utility of NFTs is flipping NFTs into more money than you bought them for. And I think right now that is both a blessing and a curse. I think there will be some additional functionality that comes to NFTs that people will be excited about and maybe use in the real world. But right now, I think the sticky nature of NFTs is being able to turn $1 into $2. In Ether terms, of course, and watch out for those gas fees while you're doing so. So anyway, I don't know what my point is. I just wanted to rag on Will for like being a big baller. So anyway, Jen, back to you before we wrap.
I wanted to hear why Will got cut off, and he was about to say I was right. So
wait, I didn't say that. I said that the gas fees was a nice point to bring up because it is expensive to transact on Ethereum. So maybe that's why people don't want to do it. And like the Solana NFTs kind of took off for a minute and then they sputtered. I mean, I'm very glossy, I guess, on what the NFT market's like. It's not something I'm looking at every day, but that's what I'm kind of getting from the Twitter beat. Naomi, do you have any insights for us? That NFT.
Well, I just want to, as a final remark, I just want to say, Zach, people have been commenting on your doors for like the past several episodes saying how great your doors are. And can you please put a wreath on them? Because those doors would look great with wreaths. So just putting that out there for you to contemplate as we wrap up this show for today.
Look at these naughty pine doors. Naughty with a K, not naughty with an N. Just so
I thought you said naughty, nice. Like, and I'm like, that's a weird
naughty pine.
Naughty doors. Okay.
Yeah. What lies behind the naughty doors? No one knows. Anyway. All right. Thanks, guys. Thanks, my door shout-outers. Appreciate you out there. I will try to get a wreath up on the door maybe tomorrow. All right, cool. That's it for the show. Control's telling us to wrap. Everyone's great. That was good times. I'm Zach. We got Will. We got Naomi. We got Jen. We're the Hash. We try to make you informed and entertained about the crypto sector. That's our mission here. We'll be back to do it again tomorrow. We hope you're having happy holidays and have a great day. Okay.
Peace.
Bye, guys.